In this video, we're going to talk about the fundamentals that affect price. So one of them is interest rates, right? And if you look right here, this is what I use to check the interest rates in the marketplace. So let's say, for example, if I'm trading something like the Japanese yen against pound. So if I'm trading the pound against the Japanese yen, what I'm going to do is I'm going to look for euro or GBP. So if it's euro against Japanese yen, you can see right here, euro is 4.5. So the last interest rate for the euro area is 4.5. And the last interest rate for Japan is negative 0.1. So this means that if I'm to look for any setup on euro JPY, I'm going to be more focused on buying euro JPY because this is me buying euro against selling Japanese yen. So trying to explain this in simple terms so you don't get confused. Now, if you're looking at the Japanese yen, you can see that the interest rates for the Japanese yen is lower than the interest rates of the euro, which means that investors are more likely to invest in the euro because there's higher interest rates that they're going to be benefiting from the currency rather than investing in Japanese yen that has a negative 0.1 interest rates. So they're not really going to be making any substantial profit from that investment. But in this case, they're going to be making more profit from the interest rates. Another example is the Canadian dollar as well. You can see the interest rate is it's the last interest rate for the Canadian dollar is 5. Now, if you're looking at Canadian dollar against the yen, look at the yen right here. People are going to be more inclined to buy the Canadian dollar and now against Japanese yen. So it's basically simple principles, and understanding this is going to help you to have a bias in the marketplace. So now you're not just randomly selling or buying any currency. You're basically using fundamentals to understand which of this pair is going to be a stronger pair. So the Japanese yen is going to be a weaker pair because it has very low interest rates. And now the Canadian pair is going to be a stronger pair because it has a higher interest rate. And the Japanese yen is going to be a weaker pair because it has a low interest rate. Now, another one to look at is you can look at the Brazilian currency. It's at 11.7. In as much as I don't really trade any pair that has to do with the Brazilian currency, but this means that there's going to be higher interest. So if this Brazilian dollar is paired against something like the Japanese yen, it's going to be very much bullish and it's going to have more upside against the Japanese yen. So we're going to show a breakdown and an example. Another example right here is the United Kingdom British pound, the British pound. And if you're comparing the British pound against the Japanese yen, you'll see that the British pound right here has more interest rates. So investors are more inclined to invest in the British pound rather than investing in the Japanese yen. Now let's look at the chart and see the breakdown of this and see how that works as well. So the British pound, the symbol is GBP, and the Japanese yen, the symbol is JPY. So you can see that right here, GBP, JPY. Now I've put that on my chart. Now the next thing we're going to do now is we're going to look at the pair right here. And looking at the pair right here, you can see that the British pound against the Japanese yen has really been very bullish. So this aligns with what I just told you right now. So investors are more inclined to be buying British pound against the Japanese yen, and they're more inclined to be selling Japanese yen against the British pound. That is why you're seeing this going to the upside, because British pound against Japanese yen, investors are buying British pound and they're selling Japanese yen. So this is a full example of how to use the interest rates in your trading. And I'm also going to throw more light on this, but this is just the beginning of the series. And I wanted you to understand how this works and how it affects the marketplace. So in the next video, I'll talk to you soon.